Meet Elon Musk, the second richest man on Earth. And meet Jeff Bezos, the third richest man on Earth. Elon Musk and Jeff Bezos should arguably be the ones to be the most afraid of filing their taxes, asking themselves how many billions they're gonna have to pay this year to the IRS. Instead, they're not worried at all, because they know and use at least one of the 8 ways to avoid paying taxes that we'll see today. In the US, the disparity between the richest Americans and everyone else has been growing. And in the last 40 years, the after-tax income of the richest has risen more than 400%, while middle-class income has only risen 50%. The way these people make money is very different from the way these people make money, and they are not taxed the same. Do you know that there's a way to absolve your investments from paying any kind of tax at all? And what about receiving tax-free money without ever touching your own? These are just 2 of the many tricks we'll see in today's video with which the rich avoid paying taxes and get richer. But let's start from the basics. Have you ever heard of CEOs of huge corporations taking a $1 annual salary? Elon Musk at Tesla and SpaceX, Evan Spiegel at Snapchat, Larry Page at Google, Mark Zuckerberg at Facebook. I mean, the list goes on, and it might sound like they're doing it out of compassion and for the benefit of the company, but the truth is, they just know the tax code. For example, in 2010, Oracle's founder and CEO Larry Ellison made only $1 in salary, but they earned over $77 million in other forms of compensation. In some cases, executives receive stock options. In some other cases, they directly receive shares of the company as compensation. And this is the first and probably the most known way rich people get richer and avoid paying taxes. And that is by using the so-called capital gains. This is because tax on capital gains is much lower than income tax. Income tax, which is the tax that we mortal people pay on our salaries, ranges from 10 to 37% in the US. Capital gains, on the other hand, which is a tax that you pay on the gains you make with your investments, have a maximum tax rate of just 20%, half of the income tax. And that's the reason why Warren Buffett, one of the richest people in the world, pays half the taxes of his secretary.
She pays at twice the rate I pay. I think that's outrageous.
That's because his secretary pays income taxes on her salary, while Buffett pays capital gains taxes on his sold stocks. But there is another advantage of capital gains. When Elon Musk founded Tesla in 2003, Tesla was worth nothing. Later in 2010, Tesla went public at $17 per share, with a total value called market capitalization of $1.7 billion. So the company was figuratively divided into around 100 million small pieces called shares, each valued $17, that together made up the whole value of the company. And Elon Musk kept part of these 100 million shares, selling to the employees and to the stock market only the rest. And he didn't have to buy his part. Who was already is. So fast forward to today, Tesla is worth $582 billion, 342 times more than the $1.7 billion of 2010. So whatever value he owned back then in 2010 has now become 342 times bigger without even having to pay taxes for it, making him one of the richest men in the world. And he's just gonna have to pay taxes on the gains of what he sells when he sells it. So not only capital gains are an advantage because the taxes you pay are lower than income tax, but they're also deferred to the moment you sell these investments, allowing your investments to grow without capital gain tax and make better use of compounding. People like Musk or Buffett are worth so much money because of the stock that they hold. But it's not tangible, it's not spendable or taxable money. And they can look at their portfolio and say, oh, I made $1 billion this year, but it doesn't mean they have to pay anything in taxes. Millionaires and billionaires like Elon Musk, or even real estate investors like Robert Kiyosaki, are able to use another neat trick to avoid paying taxes. They can get loans against their stocks or their assets and live off of that. Loan proceeds are not taxable, so by borrowing, you can get access to cash without paying any tax. Let's assume Mr. Wealthy bought stocks 5 years ago for a total value of $1 million, and it grew to be worth today $3 million. So what he gained here is $2 million. If you were to sell it though, he'd have to pay federal long-term capital gains on the $2 million, plus state income taxes. So when Mr. Wealthy needs some cash for another investment, but doesn't want to sell the stock and incur any taxes, he borrows $1 million against the stock to make the new investment. And since he doesn't need to sell the stocks, no sale, no taxes. And the fact is, if you're a billionaire, you don't really need any income. Right, Robert?
Now, if I borrow money, guess what? Do I pay taxes on debt? How do I get rich? I borrow money.
There is also a big loophole in capital gain taxes that the rich exploits, called the stepped-up basis. And this is the third step of the so-called buy, borrow, die method. The first two steps are the ones we've seen so far. Step 1 was buy. You buy assets like stocks or create assets like a company, and you don't pay taxes on them because you don't sell them. Step number 2 was borrow. You borrow against your assets and you don't pay taxes on it because it's a debt. Step number 3 is die, which uses that loophole in capital gain taxes that the rich exploits. If a billionaire were to sell his stocks, he'd have to pay capital gains taxes based on his profits. But if he holds off selling his entire life, when he dies, whoever inherits the stock and then sells it would only have to pay taxes on what they earned after they inherited it. So all of the original gains of the father stay untaxed. Let's say, for example, that you buy $10,000 of stocks and during your lifetime they grow to be worth $100,000. If you sold them, you'd have to pay capital gain tax on $90,000. But if you hold on to them until you die, your heir gets $100,000, which becomes the new basis for the calculation. So he can keep doing the same thing you did, or if he sells them, he's not gonna pay a dime. Another way to save on taxes for the rich that own a business is to deduct business expenses. I know some of you now might say, yeah, well, but they have to be business expenses. They just can't be personal expenses. Well, I tend to disagree. It's pretty easy to disguise private restaurant dinners as a business expense or to buy things like cars, electronics, furniture as business means, but using them also privately. Theoretically, most of the things we use in our personal life can be easily disguised as a business expense, even though it's not right and actually it's not legal. So when you're a person, you buy your phone with money that has been already taxed by income tax and you even pay sales tax on it. But if you own a company and you buy the same phone as a business expense, you deduct the whole purchase amount, meaning you won't pay taxes on that amount and you don't even have to pay the sales tax. And if you end up spending more than you earn, don't worry, you can even use those losses to your advantage. Thanks to the IRS rule called net operating loss carry forward, you can just carry your loss forward to a future year when the deduction would be more advantageous. And if you want to carry losses forward to future years without having losses, there is another way. Claiming depreciation. Properties like buildings, rental properties, machines, cars and trucks, furnishing, equipment, patents and copyrights are considered depreciating assets. Depreciation is a deduction that allows you to recover the cost of a certain property over time. So let's say that you are Grant Cardone and you buy yourself or your company a new private jet. The amount you paid for the jet gets deducted from your taxable revenue little by little within the next 10 years. There are many other ways to avoid paying taxes legally, and that is something that most rich people do. For example, they earn income by renting out properties by deducting property taxes. They sell real estate they inherit, they hire their kids to do legitimate work to get a tax break, they buy whole life insurance, receiving tax-deferred growth as the policy grows, and giving the amount tax-free to the lucky beneficiary when they die. They defer income. I mean, there are so many ways and rich people know how to use them. And then there is us, investors and aspiring investors who want to make the big step and are maybe halfway there. So what is left to do? If you're ready to invest and grow your portfolio, join us and subscribe to this channel for future videos like this. And of course, if you enjoy this content, drop a like to this video because it's free, but it helps me enormously. Thank you so much, guys. I wish you a great evening, and as always, I'll see you in the next video. Ciao.